Elliot Begoun with TIG, and joined by Chuck and Evan today. We're going to talk a little bit about, how things can be moving forward in this craziness and the opportunity amidst the chaos, and just cover everything far-reaching from fundraising to D2C to keeping your brand relevant to strategy in the midst of all of this. Just some housekeeping. You can type your questions into the Q&A down at the bottom of your screen, and we will use that throughout this conversation to answer your questions directly. Anything that we can't answer here, we'll follow up, as well as you can chat to any of the panelists in the chat box and post any thoughts and questions there. So without any further ado, I'll let the guys introduce themselves. I'll start with you, Evan.
All right, I'm Evan Faber, CEO and Chief Strategist of Moxie Sozo. We are a design and advertising agency in Boulder, Colorado.
And Chuck.
Hey, I'm Chuck. I'm at Holland and Hart, and I'm a lawyer, but I work in the consumer industry only, represent over 100 brands and a lot of the active consumer investment funds. So I see you.
And Chuck, by the way, everyone, is my younger, less attractive brother. So
yeah,
that's
not what Mom says, but
that's true. That's true. I'm still her favorite. I'll start while we're waiting for some questions to come in and people are still joining. But start with you, Chuck. Just one of the things that's top of mind for a lot of people is what are they doing right now if they were in the middle of a raise or trying to start a raise, especially those early stage brands. And wanted to get your kind of feedback first on just the overall what you're seeing in terms of the fundraising landscape, and then anything that you're seeing having changed term-wise in the last few weeks. So.
Sure. So I'll start kind of broad, which is my expectation based on talking to the funds that we work with is that the funds will still be active investors, right? Even if we have the recession that we think we're going to have, the funds still intend to be active investors. That doesn't mean that there won't be a decrease in available capital. I think there will be, not the least of which is there may be a decrease in angel investment. But the funds absolutely expect that they're probably going to be getting better terms than they have over the last, you might even stretch it out to a decade, where it's been kind of the most entrepreneur favorable climate to take money into consumer companies that I think I've ever seen, and maybe the same for you, Elliot. And so that there's going to be an adjustment there that people have to be realistic about. But the money, there's still going to be money available. If you are a company that's in the middle of your raise and you have someone that's already agreed to terms with you, stop asking for small things and get it done and get the money in your bank account. That is the simplest advice I can give. On both sides, because we represent a lot of brands, the number of times, unfortunately, even in this current environment, I'm seeing where it's like, well, can I get this one thing more? Can I get this one thing more? Shouldn't I raise a little less to minimize an extra 1 point of dilution? My short answer is take the money, take more money than you think you need if it's available, and then just execute.
So, I mean, one of the things that we're seeing and talking to a lot of brands who may have been raising note rounds or even considering raising priced rounds is to think a little bit more microscopic. Look at really, first of all, obviously identify any other sources of funding that are available from CARES or from the CARES Act or from even asset-based lenders if it makes sense. But if they're going to raise what you think it's going to be a struggle, especially if you're raising from angels, you're going to have to excite them. You're going to have to get them interested in getting their powder wet. Otherwise, they're going to sit on the sidelines. So, we're talking about calling it kind of tongue-in-cheek an apocalypse round, where they take the 6 to 9 months that they're going to need until things may normalize a bit more, and raising that in terms that are very exciting and favorable to investors. That would obviously, include potentially decreasing the valuation cap and increasing the discount and follow-on rights and other things along those lines to try to get them to put their powder in. Anything that you're seeing there or recommend doing or not doing, Chuck?
Sure. I mean, I'll start with the obvious, which is if your company needs money and you can't raise money, you're dead, right? So you've got to raise the money, and raising the money may mean giving things to investors that you may not have given them 6 to 12 months ago. Because first of all, some investors, like I said, not necessarily in my mind, the funds, but some investors are going to be scared to deploy capital right now. It's very uncertain. And there are lots of opportunities, even for people who have a lot of deployable capital. They view periods like right now as where they can get good deals, and they're going to pick the best deals and the best opportunities for upside for their money. So we definitely, from angel to fund, are seeing investors shift and take that position of, if I'm going to put $250,000 or $2.5 million at risk in this company, I may expect a little more than I used to. So let's maybe talk on the angel end, Elliot, which I think may have been where you were going. When you're raising, call it $500,000 in angel money, of course, it's better for you if your convertible note, let's say you're raising in a convertible note, and let's say your convertible note has a valuation cap, which is the highest value at which the investor will invest. And therefore, the lower the cap, the better for the investor. The higher the cap, the better for the existing stockholders, the founders. If you need to raise 500 and people are willing to invest at a 3.5 cap and not at a 5, the long-term impact to your business of the extra dilution is not as meaningful as not being able to execute through this period. So take the 3.5, entice the investors, and get your round done, get the money in the bank. To your point about 6 to 9 months down the road, for the last long while, we've looked at these bridge rounds as saying, oh, we only have to get you 6 months down the road, and then you're going to have a valuation spike because all of the orders that you think are going to be coming in will have come in, or X, Y, or Z will have happened in your business. And then there's almost unlimited available capital for people who are executing. I would caution folks not to make that assumption anymore. Build in more money for more runway, cut costs as much as you possibly can, because the money may or may not be there in 6 to 9 months, even if you execute.
Yeah, and I'm going to turn this to you, Evan, in a second, because I think one of the other realities that I see and believe is that some of the gambling money is going to come off the table. There's going to be more of a premium put on capital efficiency, and I think brands are going to be really required to build their tribe digitally, be e-commerce enabled, and especially younger brands, especially brands who are trying to drive discovery, who are trying to build improved traction. They're going to need to look to do that in more capital efficient ways in order to get to the point they have investors interested in putting more money against their growth hypothesis. So Evan, I mean, anything that you can suggest in terms of how do brands begin to do that, especially right now where there's so much noise, there's so much bombardment of information online, yet at the same time, a lot of people are spending a lot more time online. What can brands do strategically right now to begin to communicate and build tribe?
Yep. Let's set the stage philosophically first. And that is, what period of time is this for you? It certainly is a time of amplified disruption. It is also a moment of truth for a lot of brands. And taking this moment to strive through the challenges, not to look at the near term, but to look at the long game here. And although we have immediate pressures which are being placed on us, it's pressure testing our infrastructure, it's pressure testing our brand, it's pressure testing everything about who we are as a company and who we are as a brand. And the solutions that we come up with now will help to future-proof us for the longer burn disruptions that we face that shift economies. So part of that is that the issues and challenges which are maybe more longer term are now in our face. And one of those has to do with the brand that you're going to be and the message that you're going to tell. And so to begin to tell a compelling story efficiently on a D2C space, but really anywhere, you have to pinpoint the point of view and the focus that you want to have as a brand. So there's a lot in your question. You asked a lot about, or you mentioned the noise that's happening right now in the category, and how do you stand out in that, and what can you say, and what can't you say? Part of that is reminding yourselves what it is that you're selling. I was talking to a semiotician, a sociologist, psychologist the other night, and we were talking about it's not the products, right? You're selling an idea. You might be selling optimism, you might be selling levity, you might be selling full potential, but taking a look right now at your company and asking, how hard is my product selling for me? And how hard is my brand selling for me? And oftentimes, if the product's doing too much selling and the brand isn't, that's where some uncertainty comes to play. But the moment you know what your brand stands for, and that story that you want to tell, all of a sudden inspiration opens up. And in terms of resources, when you know who you are as a brand, you have a much stronger platform to take risks from, because you know your sound starting point instead of just guessing, which means, and why this relates back to spend, is you'll have to amplify your storytelling. You'll have to push, take risks a little bit more, amplify the personality a little bit more, amplify the message, dial in that point of view. Those are all the kind of foundational elements, but I can get more specific if you want.
Yeah, I'll definitely hit you up on that in a second, because I think one of the things that I want to talk a little bit about is the fact that there is a window of opportunity here. So, although some brands right now are having unprecedented sales, either online or brick and mortar or both, and others are experiencing the exact opposite, unfortunately. There are a lot of day-to-day activities that are just not accessible to the typical founder or team right now. So, there isn't the same kind of travel going on, sales calls, meetings, things along those lines. So inherently, most people can be using this time to do things differently, to take steps to improve their brands, their businesses, their themselves as founders, etc., and use that to potentially leapfrog their competition when the veil lifts. Whenever we reach this term, which I hate this term, by the way, the new normal, because and I don't think either actually is true. I just think shit's going to change, and that's fine. But what I'm going to ask each of you this kind of question, and it can relate both specifically to your areas of focus, but also just as general business people. If you were going to encourage founders to do something or examine something or some things, what would it be? So I'll go to you first, Chuck. You're on mute, Chuck, which is always my dream, but probably doesn't work well for a webinar.
Yeah. Thank you. The one thing I want to start with an overlay of, I'm not suggesting anyone be inhumane with their approach to their teammates and whatnot, but I want to tell a story to get to your point, which is very recently I had a very meaningful angel investor that I represent who was going to write a $500,000, $750,000 check. And he dug into the company and he said, hold on. So they had $1 million in sales trailing 12. And they have $900,000 in salaries currently, right? Just salaries, right? They have 2 founders, 3 salespeople, 2 marketing people. And like, not only does that just not make sense to me generally as a business person and someone who himself has grown a consumer company, but in the current environment, if a business isn't looking at something like that and proactively thinking about how that needs to change, then that's not a business I'm willing to invest in. And to me, that went to the increasing focus on profitability that even before coronavirus, the funds and angels were pivoting towards companies that are either profitable or have a path to profitability and seem a whole lot more scrappy, instead of the I'll just raise a bunch of money and spend into it and hope my top line eventually grows. So I would encourage people to really focus on profitability of your business, analyze your unit economics, and make sure that your unit economics are sound. Analyze your fixed overhead and make sure it actually makes sense for a business of your size, et cetera, et cetera. I would be doing that, because I think that's those are going to be the businesses that attract investment money, because investors will think those businesses can get farther with less money.
Yeah, I mean, I couldn't agree more. I think, and I mentioned this before, I think there's a huge premium going to be placed on capital efficiency, which is overdue. I mean, it was trending that way. But I think, brands have to be lean and nimble and scrappy and be able to deploy their capital in ways that drive growth and profitable growth, not that just build bulk or build more mouths to feed. So I do think, really, really looking and asking yourselves the hard question is my team lean and nimble? Can I do more with less? And can I really position myself right now in a way that improves my ability to be more effective with the use of capital, extend my runway, and attract more future investment? Because that the bottom line is pretty simple math. If you need less capital to get to the finish line of your business or to get to where it's self-sustaining, those investors who put in cash are going to experience less dilution and be a lot more excited about the investment. All right, Evan, to you, man. What would you be advising right now as people are thinking and sitting and wondering, what can I do to move my business forward? How do I leapfrog my competition?
Yep. I think using advertising in a smart way as research is one of the most effective ways to go. So we have a captive audience on digital right now, and by leveraging digital buys that A/B test different messages, that experiment with different consumer groups, that really are looking to dial things in, and starting with the lower spend, dialing back the spend at first until that's optimized, and then slowly increasing where you're seeing success. So you're not taking maybe the hot right now currently just a broad mass spend to try and generate awareness, but it's a much more strategic and small approach, and then you ramp up slowly. On the flip side, on the other side, when the exits occur, part of the valuation is going to come from the power of the brand itself. So it's keeping your eyes on the short-term sales that you can get, but it's also not losing sight of the longer-term messages which you need that brand to carry for you. And so, in order to leapfrog the competition, if the competition is all about conversion right now, how can you bring a little bit of a higher level message, but still driving that conversion? That's the needle to try and thread, a strong, powerful brand message that ultimately will drive the loyalty, not just the conversion.
So let me talk about brand.
Hey, Elliot.
Yeah, Chuck, go ahead.
I just want to emphasize something Evan said that applies in all markets for consumer products companies, which is, as someone who does a lot of M&A in the space and financings in the space, the core value of your company is your brand. At the end of the day, companies can, meaning acquirers, can figure out how to reverse engineer most of these products, make them, et cetera. The core value and what people will pay for is the strength of your brand. So I couldn't agree with Evan more.
Yeah, I couldn't either. I mean, brands are emotional. It's something that isn't easily replicated. So focusing on brand building and brand strengthening and connection right now is great. But I want to come back, Evan, to something you were talking about in terms of messaging in general. So I'm watching kind of as a kind of an amateur marketer and sociologist, the balance that people are trying to strike in the way they communicate outwardly right now. So you've got folks that are, every message they're doing is COVID-19 related, right? So, and trying to be, very on message around that and empathetic, which, there's a degree into which it rings sincere, and there's others that seem it feels very inauthentic. And then there's others that seem tone deaf to it, right? Or are using this moment right now to be focused on, making discounts, selling deals, doing whatever. And I think that doesn't work. How do you figure out your brand messaging for a moment in time like this that is unprecedented? How do you actually figure out what your voice should or shouldn't be?
There are brands that can extend life for people, and there are brands that make that life worth living. And a lot of the brands in the CPG space tell stories which make life worth living. And so I would look at it in part as a Venn diagram. Look at all of the issues and concerns which COVID-19 is raising, and look at all of the stories and messages which your brand inherently tells and stands for, and define them if you haven't. And the happy medium, so to speak, in the middle would be to directly or indirectly use the themes that your brand stands for to articulate how people should navigate COVID-19. So, for example, if your brand is selling levity, keep the levity going, and look for ways that, again, it's not just levity in your own brand world, but it's what are people going through right now, and how can I provide levity? How can I provide that uplifting spirit to that? If your brand is about wisdom, if that's what you're selling, same thing. What are people going through? And what people are going through is absolutely dynamic, and it's going to continue to change, because right now we're still in the adjustment period for a lot of people, and this is going to be a marathon and not a sprint. So it's not just what you want to say today, but watch as people's needs change, and then ask yourself, what is that overlap? Where do I have the right to speak? And it just goes back to what you're truly selling and what you're truly standing for. So indirectly overlapping your brand's themes onto it. So it's not so much in your face, but it's bridging people where they are now and showing them a way out.
Very interesting. And I think that's hard to figure out. And I like the concept of doing it in a Venn diagram and trying to figure where that overlap is. And, the thing that I would just add to that, and disagree if you want to, I know Chuck will want to, just because that's how he rolls, that, it's okay to experiment right now. Imperfect action is better than no action. I know a lot of people are fearful about, messaging and messaging in a way that doesn't ring appropriate for the times. But I will encourage anyone to try. I mean, just try to do it from a position of authenticity and do it from the way your brand normally speaks and would speak in these times. And if your message doesn't ring, then you adjust, and you can adjust, but you don't want to be invisible during this time. It'll hurt your brand.
Could I add to that, Elliot, real quick?
Please.
And that's, imperfection is not just, it's important, because imperfection is vulnerable. Imperfection is human. Imperfection, it's the brands that try and dance this perfect dance and try and just be everything that consumer wants, that it doesn't ring true. Imperfection in personality, in our messaging, in showing our humanness will actually connect. And we talk about this with voice and tone and personality. Oftentimes we, ask to describe your best friend, or like, Elliot, how would you describe Chuck? Or Chuck, how would you describe Elliot?
I'd rather do that.
Yeah, I can't do that we can't do that on a podcast.
So like,
On a
exactly.
webinar.
Like
Can't do that publicly.
Yeah. You would start with, reliable, trustworthy, but then you'd be like,
Wait,
really?
Elliot?
Elliot? No, right? No.
Yeah, okay. Sorry, I wanted to make sure who we were talking about.
You're 0 for 2 so far.
Point being, it is the faults and it is the great virtues that make somebody interesting. And it's true for brands. It's not just the vanilla, trust and reliable and transparency. Maybe you are a little bit overconfident, or maybe you are a little brash or a little blunt, but having your imperfections and showing your vulnerability is a big strength as a brand.
Yeah.
And Evan, that almost
Go
That
ahead.
almost sounds like how we relate to people, in the sense that it's not just okay, but a bonding experience to be imperfect, but it's never okay to be insincere.
Yeah, well said. Yep.
That's
Totally.
pretty impressive for a lawyer. That's,
No,
that,
I was
that,
mansplaining Evan's own point
that,
backwards.
that was almost bordering on human feelings. So that seems very, very out of character for an attorney. I think, and I do think, to that point, brands are a part of our lives, and our brands need to be a part of this moment in time, because they are alongside us, and we should be doing that. And just like people, they're imperfect. So I'm going to flip to the negative right now, just for a second, and just kind of talk about, we see things that are going on, and I'm wondering if you are seeing anything that causes concern, or things that you think brands or founders are doing wrong at this moment in time. So I'll start with you, Evan, there. So.
I'll tell you, a lot of the brands we work with, it's hard to answer that question because I see them doing a lot of things right. I'm hearing in a lot of the discussions, even the brands that are worried about the future are still recognize the importance of pushing through it. I would say, just in general, focusing on the challenges more than the solutions, or letting the challenges or problems drain your ability of keeping that optimistic drive, which is at the heart of your company, especially if you're a founder. Letting the problems and challenges, focusing on them too much. We need to take a challenge and take a problem like we would a weight. We lift weights, we get stronger, but then we don't tie that weight to ourselves and walk around the day with it dragging behind us, because we would just be fatigued. So recognizing the challenges that are facing the brand and business, but putting the energy around that moment of experimentation, that this is a very unique moment to try things that haven't been tried before, because we're in a paradigm shift right now. So everything is in flux, and it is a great moment to, again, future-proof yourself in certain ways, because the disruption's at hand, but also try new things, because consumers are showing up now in digital at a faster rate. It's just accelerating that timeline a little bit. So that high level. Yep.
Chuck?
What are they doing wrong? It's hard to say with perfect clarity, because this is so new for everyone. So what I think people are doing wrong, I may end up being wrong, but I'll share it anyway. Where I see entrepreneurs not reacting with sufficient speed and courage to the idea that things are different. The environment is different. My personal perspective is this isn't going to go right back to normal in 2 or 3 weeks or a month, whenever your quarantine ends. You could see that played out with founders who have sort of dug their heels in on demanding the valuation for their company that they would have gotten 6 months ago, and not moving forward with a fundraising they truly need as a result. You could see it with people not wanting to make hard choices around expenses. And the latter, in particular, like, I think there are two different motivations there, right? Like, in each case, you may have to just make the hard decision, but the motivation in the latter tends to come from the right place, which is there are negative impacts to others from making those hard decisions. Whereas the first one, I think, just comes from people not recognizing a new reality, or being reasonable about the fact that right now their company is probably worth less than it would have been with the exact same numbers 12 months ago.
Yeah, and I agree with all of those, and I'll add to it a few others. One is just inaction, just being paralyzed by this, by giving into fear and not doing anything, or playing the woe is me. Everybody has a new set of circumstances here, and those that find steps that they can take to move forward are going to be the ones that make the great advances, and those that do nothing, retreat, or shelter their businesses in place like their families, it isn't going to advance the business. So that's one. Along the lines of what you were just saying, Chuck, but saying it slightly differently, is confusing the difference between being nice and being kind. So, now while everybody should work and aspire to be nice, you can't, sorry, you can't always be nice. So now is the time where you will have to make some difficult decisions. And if that difficult decision requires you in that moment in time not to be nice, but it's giving that person the opportunity to make the next step. It's keeping the rest of your team able to be gainfully employed. It's positioning you and your family to be able to succeed. Then that is being kind. And as well as also being aware that you're going to have to make non-economic choices to protect your team and your workers, and that may fly in the face of revenue, but you need to do that. And then I think that the third thing is that we're having so many of these. I mean, these are the best ones to be on, by the way. So if you're not on this one, sucks to be you. But there's so much information, which is awesome. The industry is galvanized and is trying to share information. And we're hearing, whether they're sharing stories of how they persevered through challenges, whether it's really deep, meaty, specific information on the CARES Act or anything along those lines, or whether it's just these kind of informal conversations. The risk, however, is that you're being fed this information and you're drinking from a fire hose and you feel like you have to do all of these things. And what I would encourage brands to be doing is don't try to do everything. Pick the one or two things that you feel you can execute well and try it. Set very, very specific objectives or measurements to know whether that trial is working the way you thought it would, and give it enough time to actuate before you make decisions. Because if you try to do too much, you'll wind up doing nothing and just being ineffective. And just one last thing there is, don't look 2 weeks from now. Don't look a week from now. I mean, there are going to be actions that you take that are really important now that may not manifest in a meaningful way, either revenue wise or even changing the course of the business for many, many months, but you still need to take those steps and be taking those steps, because to try to navigate on a daily basis when the information and the world is changing on a minute by minute basis is, in my opinion, a fool's errand. So I'm going to jump to a couple other questions, but just as a reminder.
Hey, Elliot.
Yeah, go ahead,
Before
John.
we get there, one quick thing. We're not going to obviously do a CARES Act deep dive here, but if you're eligible for like the payroll protection loan, and you may not be eligible if you took venture money and they have certain negative, veto rights, which is a separate topic we get into, you should take that money and you should apply quickly because it's going to go. So if you're eligible for that loan, it's as close to free money as we're going to see. Go get it before it's gone.
Yeah, and just do it. Just take that action and at least fill out the paperwork. And don't tell yourself you're not going to qualify, or you don't have time, or it's not that much money. It's every dollar helps, and it is. Chuck's right. It is the equivalent, the closest thing that you'll ever find to free money, and I would encourage everyone to do it. But anyways, reminder of the Q&A box. We're here. We'll happily answer your questions, and it could be on any topic that relates to to Chuck's expertise or Evan's expertise, or just what we're seeing in the market in general. But while we're leaving that open, I'm going to change a little bit more towards future looking now. So just there's a lot of changes. Some of these, I believe, are seed changes that are not going to walk backwards. But I'm curious, kind of, for both of your perspectives, what do you think has changed or is changing that is likely to stick when we come to the other side of this? So I'll start with you this time, Chuck.
I think small, but I think people's behavior around cleanliness is going to stick.
I hope yours does.
That I may be the exception. For example, I think the long-term demand for things like hand sanitizers is not going to go back to what it was pre-coronavirus, or products which legitimately can claim to boost immunity and so on. Even that sentence was packed. But I think things around keeping yourself healthy, changes that we're seeing now for those types of products, I think there's going to be a long-term increase in demand for those products.
Cool. Evan?
Yeah, I would build on that. I think that this whole thing reminded people of the importance of natural products and products that had the genuine health and well-being of their consumers at heart throughout the product development and their messaging. And I think people have discovered them, and they're discovering how powerful they can be. And so a lot of that will be residual. And I think a lot of the digital transformation that's occurring right now will stick. I think more people are being introduced to digital grocery shopping and delivery and all kinds of mechanisms around that front. So the digital commerce and your ability to speak through e-commerce and through digital is going to remain a higher importance coming out of this than it was going in.
Yeah, and I think some other changes, some of them are cool. I think more and more meetings with buyers and activity are going to be done this way. And I think that will save, obviously, wear and tear on families, on people as they travel, on the environment, which is cool. I also believe, as I said before, that some of this gambling money is coming off the table, and capital efficiency is going to be a premium. I think discovery is going to be driven more for young brands through D2C, even digital B2B and alternative channels. So I would encourage anyone who isn't building a brand that's e-com enabled to rethink that and make sure that they are building a brand that is e-com enabled. It doesn't mean you have to be ambient, because I do think both the cost, the economics, and the logistics on refrigerated and frozen D2C is going to continue to evolve and come down and be more accessible. And I also think that we're going to have a little bit more of an awareness on the price of our busyness and the impact of, living a life like we do, which is we're filling every possible moment, and slowing down is not a bad thing, and maybe appreciate that a little bit. So we do have our first question, but according to the anonymous source, who I will divulge later, he forgot the question because he was too distracted by Chuck's muscles, is what the question said. But just so everyone knows, Chuck has figured out how to position the camera in a way that inflates the size of his arms. I've seen them in real life, and they're not very impressive. So
it's like Jason Momoa's commercial at the Super Bowl.
Yeah. So
yeah.
Okay, so just continuing on with that, or lines of questions. In terms of activity in the marketplace, what are you hearing, if anything, from larger brands? Because, a lot of the people on this call here are likely to be either earlier stage brands or other service providers. But what are you hearing from some of the larger brands and funds and the people who may have a broader view of the global market as to what's happening, where there's opportunity, where there's concern, what's being told? I'll go with you, Chuck, first.
Okay, I'll start with funds. So I'll go negative and then positive. A lot of the funds, and it aligns in my point of view, believe this is going to be a deep recession if you judge it by how much the stock market retreats, how much unemployment goes up, et cetera. This isn't going to be a short-term blip, and they're acting accordingly. On the positive side, because it goes to capital flow, a lot of the funds I'm talking to effectively say, look, let me take a step back so people who don't understand how these funds work get it. The funds get capital commitments from a bunch of either other funds or rich folks or institutions, and that's the size of their fund. So let's say I have a $200 million fund that I just opened in the last year or two. I may only have invested 15 million of it. I have another 185 million to invest. If I don't invest it, I won't earn all the upside, which is why I started a fund, which is called carried interest, which is the profit on the investments. So I'm absolutely going to deploy that capital. I have a meaningful personal incentive to deploy that capital. And so they're looking at this time as an opportunity. The next 6 to 18 months, they're going to deploy meaningful capital into a lot of the best companies. The idea being, by the time these companies are ready to sell, we'll be out of the recession, valuations will have rebounded, yet we would have gotten into these companies at recession pricing, and they would have been scrappier because of the recession, all of which impacts a higher return for them. So the positive is, I think the funds are going to be very active in our particular space, the consumer product space.
Okay. Evan?
That's what I'm hearing.
I think a lot of the larger brands, just by their sheer size, they're taking a little bit more of a defensive posture for now, and that frees up the ability for the smaller brands to continue to make moves, continue to take risks, and to stand out, especially during this time. So just speaking back to the importance of not just doing nothing, but really dialing in your message and amplifying it in a big way. So that's just given the nature of the sheer size of the company and how fast these brands move. But heading into all of this, we saw a letter go out to the CEOs of the top companies that was really underlying the importance of sustainability. And we're seeing a lot of the larger brands focusing more on sustainable messaging and putting some capital behind it to reinforce those initiatives. So we're likely going to see that momentum going, especially, and this could be another long-term change which has occurred. Consumers are almost demanding a soul from the companies that they do business with. And so coming out of this, I think larger brands are going to have more of that story to tell of sustainability and of consumer good, which a lot of the smaller brands have championed for a long time.
And I'll share what I'm hearing. I'm hearing a few things. One is I'm hearing the resounding bang of the drum around SKU rationalization. So I'm hearing a lot of the bigger brands taking a hard look at their portfolio and not focusing on holding on to their tail SKUs, right? Letting those go. And that's carrying forward to the distributors and the retailers. I think there's a recognition that there was an over skewed position, and that breeds inefficiency because there wasn't enough room on trucks for product. There wasn't enough room on shelf for products because there were so many. So I think there's going to be some pressure about SKU rationalization, which means, just quite honestly, that means for earlier stage brands, getting ES is going to get harder because they're going to take on fewer SKUs and fewer brands. And I also think that, I'm also hearing from some of the larger brands the same thing, that they think this will be a downturn that lasts for a while, but money will still be here, because I do think overall that this sector, and in particular natural products right now, will outperform just about any other sector in a recession. So I'm thankful every day to be in the space that we're in, if we're going to be facing an economic downturn. So, okay, so switching to another question, entrepreneurship in general. So a lot of question back and forth, and I heard a conversation the other day, and I won't tell you my opinion on it yet because I don't want to influence yours, especially you, Chuck, because you're so easily swayed. But what does this do to the future entrepreneurs and to just founders and new brands coming into this space going forward? What does this downturn and what does this moment in time do to that? I'll start with you, Evan.
Yeah. So there's going to be obvious risk aversion as people are shoring up their own security. But what this is going to do is uncover opportunities which we haven't yet discovered. So it's easy to see the societal disruption that's occurring right now. It's harder to put a pin on the longer term cultural disruptions that's taking place and what new consumer needs are. We're starting to discover what the new consumer needs are. But as those change and as those evolve, it's going to create whole new needs and whole new markets and whole new things which need to be served as society has shifted. So I would imagine there's going to be, kind of as we need to weather the storm, but that's not going to shut down our inherent imagination and creativity as people. And so we're going to continue to have these ideas, and we'll watch as new opportunities arise to create demand, create a new category, or just deliver in a category in a different way. So, there's going to be a little bit of a lull, but then it's going to awaken possibilities, which, we're just starting to see emerge right now.
Great. Chuck?
Yeah, I think we'll see a lot of entrepreneurship from the folks who are losing their jobs, because it's a lot better than doing nothing, and people will have the energy to start a business from desperation. But I keep pounding the same drum, but I think businesses will focus more on unit economics, profitability, and being scrappy than they have over the last decade. And I think that's going to be to the overall health of those businesses and their long-term prospects. And we started to see a lot of entrepreneurs over the last little bit who thought they could start a company and sell it in 3 or 4 years by just raising a ton of venture capital, trying to get distribution, getting a bunch of trial and pushing sales. And I think that model is going to decrease, and people are going to understand they're in this for the long haul, and they need to build a long-term sustainable business.
And I agree with what you both said. I mean, my personal take is that if you look back after the Great Recession, there was a big surge in entrepreneurship, and partly it is because people had to invent their own jobs, but also I think a big part of it is that it takes getting shaken out of your nest before you're willing to take a risk like this. It's a lot more challenging to quit a good, comfortable job to start a business with all this uncertainty. But when you're sitting at home thinking about what's next, and one of those options is going back to another unfulfilling job, I think a lot of people will jump in. And I actually wanted to bring this up because I feel strongly that this is a cautionary tale for anyone listening, because I think there's going to be a wave of entrepreneurship that comes out of this hardship. And I think they're going to be focused on everything Chuck just said. And I think, they're going to be digitally native. They're going to be scrappy. They're going to be focused on unit economics. They're going to be focused on bringing things to the market without the need for a lot of outside capital or in big dollars. So if you don't start thinking that way, if you as an entrepreneur, as a founder, don't begin to question your business and be able to ready yourself for what I believe will be a wave of new entrepreneurs, then you might just get passed by, caught in the middle, caught between not being big enough and relevant enough quite yet in retail, and not being scrappy and nimble enough and capital efficient in order to play against those. So again, using this time right now to really ask yourself that question, and thinking through how and where do I reinvent myself. So,
Hey, Elliot, my 3-year-old's banging on my door. I'll be back in 1 minute.
Okay. Tell her I said hi. Perfect timing, because our question came in about mentioning that I mentioned that the cost of perishable and e-commerce may be reducing. And can I speak a bit more about this? It is, because there's more and more service providers, coming to solve this. I don't know if anyone has read, but even Amazon has got this concept they're calling the mothership, which are mass warehouses that have refrigerated and frozen capabilities. There is also the growing 3PL solutions providers who are getting more and more effective. So it'll never be, in my opinion, it'll never be on par with ambient, but it's going to be in my mind, we're going to reach a time where it for the right kind of consumer, the motivated consumer, for subscription models, it'll make sense. And we're seeing it in things like, surprisingly, like ice cream, and where people want their comfort food delivered at home, and not just in functional foods. So, Evan, okay, so question for you. Let's see, another question to come in here. Nope, I'm going to go ahead and go to the next thing. So question for you is, if you're sitting in front of, virtually now sitting in front of a founder and looking at her, or him, and being asked to give just really good counsel, what would you be telling them? What would you be advising them to be thinking about, doing, questioning, considering, etc., right now in this moment?
Mhm. Well, part of it would be asking who a brand really serves. And a large majority of that is your audience and your consumers. And the other big piece of it is your workers and your internal team. And a tremendous brand lines everything up beautifully. It lines up your internal operations with your external communications. And looking at the systems and the culture and the way that your brand decisions are affecting your internal team, and how your values are driving your decision making, and how your purpose and mission and vision are being tested and are they working for you. But revisiting the core strategic language of where you are and seeing if the theory is lining up with the actions that are taking place. And is it improving the internal team and making them stronger? And is it delivering the right message to the right people? And if not, now would be a great time to focus in on them, because again, they're being pressure tested like never before. And so you can create diamonds right now in a lot of ways by focusing on how your brand is translating internally and externally, because a lot of your success is going to ride on your team's ability to rebound as well after this and to carry you through it. So I'd be looking at the implications there. And Elliot, I think you're on mute.
So Chuck, thanks.
Yep.
Chuck's dream. I tossed this question out to Evan when you walked out, so I'll do it to you too. In terms of, if you were sitting virtually, across the table from a founder right now who is just looking to you for advice, just general advice, what they should be doing, what they should be exploring, considering, etc., what wisdom would you share with them?
That's a good one. I'll lean away from specifics and lean towards the general, which is create a business that'll be here in 2 years. And they're going to have to decide based on their business what that means, right? Maybe thankfully in CPG, a lot of businesses are going to be able to continue to grow over the next 2 years and take venture money and whatnot. But their number one priority right now is to keep the business alive. And so I would be telling them, look at everything you need to do. Don't assume unlimited capital is still there, to keep your business alive. And given we deal with brands, with one caveat, which would be in a way that's consistent with your brand, right? If you have to destroy your brand to keep your business alive, that was a hard one, Elliot.
It is a hard question, and I think, let me rephrase it slightly, and I'll throw it back. Start with you in particular, Chuck, because sadly, and I don't, again, there's a lot of these webinars going on. There's a lot of conversation. There's a lot of advice, and again, people sharing about how they persevered. But regardless of all of this, there are going to be some of you whose brands don't weather this storm. It's just unfortunately true. And not to be a naysayer or to be a downer, I also think it's really important to acknowledge that. So how and where, Chuck, do you draw that line? If you're advising a founder, what signals need to be flying or showing themselves for you to consider or advise that reduction?
Yeah, so I'll give you hypothetical examples. If you have a new line extension or new products that you were going to come out with that you're just in love with, which don't have great unit economics, kill them, right? If you, to the point you made earlier, if you have 7 employees and you can't keep the business alive, unless 2 of them leave, unfortunately 2 of them are going to have to leave. Like, you're going to have to do what you need to do to keep your business alive. And if you have a big venture check that you've either taken or can take, then great. I'm not talking to you. I'm talking to people who are going to have trouble keeping their businesses alive. And to your point, there are going to be some products and businesses which die, and the callous commentary I have around that is some of them should die, right? They were built for a non-sustainable economic model where there's just unlimited inflow of capital to grow a business which itself is not profitable or sustainable.
Evan?
Yeah, I think similarly with advertising, it is incorporating smarter data reporting, really setting up the back end of websites to track the flow of your audience. I think knowledge is the savior in terms of protecting your efficiency. And as has been brought up multiple times now, the new breed of brands that might be emerging from this will be efficient ones. So setting up your data infrastructure to collect and optimize data from the website and making sure everything is integrated into a central location so you can make smarter, more informed decisions about who you want to target and how you want to target them is well worth the time right now.
And I'll come back in terms of just, to me, some hard fast rules and where to draw the line. So I had some tough conversations over the past few weeks, and so a few places for me is, if you're, to Chuck's point, if your unit economics mean that every one of your items sold ends up being an investment, then stop selling those items, even if it's all of your items. And I've had a few people say, well, then I've lost all the dollars I've given away in free fill. But so be it. That's a sunk loss already, and you're going to be much better off walking the business back and fighting and living to fight another day than doubling down on what was already a bad investment. So if your unit economics are telling you that every dollar after trade, after all of the magical deductions that are taken by distributors, is not yielding any positive contribution margin, then walk that business back and retreat and start and live to fight another day. The other is, don't put your own personal financial health at risk. I've had a lot of people reach out to me and say, I'm thinking about taking out a home equity loan. Everyone has their own risk tolerance. I'm not telling you what's right or wrong. I'm just telling you personally that I would never do that. And I would never encourage anyone taking significant personal financial risk in an environment with so much uncertainty. If you are a good entrepreneur, the right brand and the right product will find you. And you'll be able to reinvent yourself. Most entrepreneurs are serial entrepreneurs, and they're going to come back and reinvent. But if you damage yourself beyond your ability to recover, or if you put your family at risk because of your belief in your product, you really should be asking yourself the hard question: is that smart? And if you can't ask yourself that with objectivity, then reach out to people in the industry who can offer you that. Ask for real feedback, no bullshit. Tell me what I should be doing.
And Elliot, I do want to add, we've said it, but at least I anyways, have interspersed it with a lot of focus on business economics and some negativity. We are absolutely blessed to be in the CPG space right now. CPG is historically recession resilient. It is especially recession resilient when most people are consuming more products at home than out. And so as long as you're not a luxury priced product, we're going to be in good shape relative to, unfortunately, virtually everyone else. So we should all be happy for that, or feel blessed is probably the better way to say that.
Yeah. And I do every day. A couple other questions before we wrap up. So one last question, and then I'll kind of toss out something just for you guys to throw any wisdom bombs down on the group. But in terms of trends, anything that you're seeing or believe is going to continue to grow, specifically over the next 6 to 18 months. Just from what you're hearing and seeing, and I'll start. Maybe that'll make it a little bit easier. But I think that to Chuck's earlier point, when we talked about just our heightened awareness over hygiene and personal wellness, that I think any products in that space that are personal wellness, immune, sleep, stress, um, personal care products that promote, the same things, those are all going to be things that drive business and drive more interest. But just curious as to what you guys are hearing or thinking. So I'll start with you, Evan.
Right. I think, as was mentioned earlier, virtual connections are going to play a larger role. That will continue. And I think we'll see an increase of more entrants into the natural product space as people see the opportunity for short and long-term health products, and that will push companies to have to figure out how to further differentiate themselves. Those would be two.
Chuck?
Yeah, I mean, I think companies like Vive Organic, the wellness shots, or Cleanwell have seen huge upticks in sales. And I don't think that I think they're going to continue to see huge upticks in sales. Maybe not quite what they're seeing right now, but because consumer behavior around those types of products is going to continue. Other long-term trends coming from this, I just back to scrappiness. I think people are going to realize they can be scrappy. To the point of interconnectedness and travel. Do you have to have every meeting in person and fly all over the place? No. And I do think we're going to see a lot of faux wellness products as well, right? People who want to take advantage of the increase in wellness demand with products that are not truly what I would anyways consider a wellness product. And so I think there will be a lot of that crowding into the market as well. And so people will need to differentiate themselves from those products.
All right, so I'm going to do one last round here. For anyone who has any last questions, type them into the Q&A box. Otherwise, we're going to just wrap up with kind of giving both Evan, Chuck, and then myself a bit of time just to editorialize, leave you with any nuggets of wisdom or thoughts, and then we'll give you everyone's contact information and go from there. So go ahead, Evan. I'll start with you.
Yep. Just to recap some of the points, being a source of strength as a brand right now, not taking such a defensive posture, but looking at how you can be strong for both your internal team and your external community. Tying that source of strength back to what you own in the market and what your brand stands for is essentially important. And pressure testing the core drivers of your business from a communications and cultural standpoint right now is going to help set you up for future success and again, future-proof you in certain ways. So,
Chuck?
Yeah, I mean, I'd like to end with some encouragement, which is some of the strongest brands have been built through recessions. The opportunity to create a connection with your consumer is really meaningful during the anxiety and uncertainty caused by a recession. The ability to create a really strong set of business fundamentals becomes a necessity during a recession. So do all of these things as opportunities. And there have been an incredible number of brands that have been built during a recession. And then when the recession ends and the economy rebounds, they're really great success and exit stories.
Yeah, and I remain, and maybe even am more so bullish about this space than ever before, because I think one, to everyone's point, that we are so blessed and lucky to be where we are in the space that we're in, because we are relatively recession proof. I do also think that people begin to just naturally become more insular, and they're looking for comfort, they're looking for wellness, they're looking for things that give them the confidence and the peace of mind that they're just desperately wanting. And I think it's super important to be, on point to that and authentic and thinking about that as it relates to products. It doesn't always have to be wellness outwardly, as we talk about wellness products. Part of wellness is emotional wellness, and there's nothing that is more tied to emotional wellness than what we consume, what we put on our bodies, what we feed our pets. You know, all of that's very aligned with that, and so you can message and be, you know, aware of that. And I think the other is that now is the time to look for the opportunity amidst the chaos. You know, the reality is, it's going to be tough sailing. There's going to be dark days, but there is, to Chuck's point, you know, so many of the companies that we now admire, whether they be in the CPG space or just in general, were companies that came out of a tough period of time and leapt forward. And they did that because during that tough period of time, they didn't lose their way. They didn't retreat. They didn't just stop. They actually took action, whether that action was imperfect or not. They still took the iterative steps to move their business forward and make something happen. And when they emerged stronger, better, and ahead of their competition. And I would encourage everyone to be doing the same. So, Evan, just if anyone wants to reach out to you, learn more about you, buy a similar hat, whatever, rent your cabin out on Airbnb when things return to normal, how do they do it?
Sure. And just Moxie Sozo is grounded and has experience in CPG natural products for 20 years. And so you can reach me at evan@moxiesozo.com is probably the fastest way. MOXIESOZO.
And Chuck, how about the same for you? How do people reach out to you and your team, and maybe just a little bit more about your team and what you do?
Sure. I want to give a quick plug for Moxie too, because they're great. And a lot of our brands use them. So I want to say you should definitely reach out to Evan.
Sure.
We are a big law firm where I run the consumer products group. My team only works with consumer products companies and funds. So anything from trademark, regulatory, SBA, or, you know, we close 50 to 70 venture and M&A deals a year in the space. So we view ourselves more than lawyers. As a result, we really understand the space, so we can be advisors. And you can catch me at CA Cotter, COTTER, at Holland Hart, HART.com.
Great. And we will make this video available to everyone who registered. We'll also be posting it to our YouTube channel should you want to watch it. And just as an aside, if anyone wants real inside information on Chuck, just let me know. I'm happy to fill you in on the unvarnished.
Literally no one asked for that.
I have a private Q&A. It's pretty full. All right, everyone. Thanks so much for joining. Chuck, Evan, thanks for doing this with me. We'll do a couple others in the coming weeks, and we might circle back and revisit as we all navigate this time. But I appreciate it, and everyone have a great day.
Thank
Thanks
you.
for having us.